Hey guys, welcome back to the channel. Here's another video. Today we're going to talk about trading levels. Really about support and resistance, which is the backbone, which is the art, which is the total basic foundation of technical analysis when it comes to trading. Like looking at charts really is about marking off your support and resistance. So I know that a lot of you guys obviously know that if you've watched really anything having to do with Forex or trading in general and technical analysis, then you know about marking off your support and resistance. But let's talk about a little few other things that have to do with it, which maybe you're not as aware. So first of all, support and resistance, these are levels or zones where prices are rejected based on the order flow. When the market is going up from a certain spot and it reaches this spot where it's hit before and it's pushed off. So likely when it's going to reach that spot again, that's the zone where the prices are rejected and you're looking to get another rejection. We're not trying to prove anything here. We're trying to go where we think the market would go. So if it rejected off that spot before, it's likely to reject off it again. And notice how I write levels or zones. Like these are really zones. You can't mark off these levels just as like a horizontal line and assume that once it hits that exact price, then it's going to bounce off of it. It's more like a range or a certain zone, within, depends what kind of level it is, but within a number of pips close to that level. And sometimes it hits higher and sometimes it hits lower, but you're seeing when you zone out, you're able to recognize and identify that zone and be able to trade off of it. And here's a basic rule. Broken support becomes new resistance, and broken resistance becomes new support. So when you're trading down and you hit some support and it breaks through, so now to go back up, that previous support becomes new resistance. And the same thing is true when you're trading up and then it breaks through that resistance. Now it becomes new support. The strongest support and resistance. The more times that the support and resistance levels are held, that means it's going to be stronger and more relevant, and you better watch out for it more. As well as the higher time frame levels are the strongest. Now, I'm going to show you on a chart that we'll see that you like to mark off the ones from maybe the weekly or the daily. If those are being, held and relevant and respected, I guess, when it comes to the bigger, higher time frames. So then when you're trading in the lower time frames, you certainly got to keep those in mind. Also, the support and resistance levels are really the best locations to trade from because you get a high reward with minimal risk, right? If you're at the top of a level and you're seeing that it's not able to get through and it looks like it's going to shoot back down because it wasn't able to break through this resistance. So if you put your stop above that resistance level and then you put your target all the way down to like the next support level, then likely many times you have a higher risk to reward ratio because you're right there at the resistance or the support level and you just need to put your stop right above or right below it, and then you have all that room till the next relevant support and resistance level. Also, you can't trade through them. I mean, you could do whatever you want, but you're not going to be successful. It's definitely not a good percentage-wise trade to try to trade through a level. And a lot of times we find these good setups, but they're going right through a double zero level, or they're going through a major support and resistance level, and you just got to stay out because even though it looks like a great double bottom, double top, head and shoulders, but if it's going right into a resistance level, you got to be super careful because those are the levels that prices get rejected at. Okay, I just wanted to also go through a chart and mark off the support and resistance levels, and maybe we could see some more things to learn about it. The market is live now, but not in a trade right now. So here's the Euro USD, and we're on the daily. Okay. So first of all, if you go back here to 2012 and you see that spot, you see how, again, when it came to 2017, it's a long time later, here it traded right through it, right? This is really like the 120 level, pretty much. But when it got there the other time, it was definitely pushed down. So that would be like a support level that I would want to put in. Okay. Over here you see there's something like, again, you're seeing that even on the daily, this little spot was respected again. 125, that's really what it is. Okay. And, we're not quite there yet now, but we did have it before. And, yeah. Okay, so that would be the daily. You could see also here, that would be another good spot. But we could see closer from the 4 hour. When we go there, we'll be able to see that. Okay, let's go to the 4 hour. Okay, so in the 4 hour, we're seeing definitely respected this daily here. This was something that came up kind of in the 4 hour a lot. And here's another one that came out up in the 4 hour. And how about over here? That's definitely noticeable. So I have one for the 4 hour. Maybe it's a different color. Yes, this way I can know what's the 4 hour and what's the daily. And here too, definitely noticeable. So these are the types of levels you see, as the market's going up, shoots back down again. Then it gets through it and goes up and it could back down. It's just going around these levels, touching it again, getting stuck over here, right? This was, previous resistance now here, and now look at that support. This was resistance over here, and now it's support. And it goes up and hits this resistance, this support, resistance, support, gets stuck over here and nice and shoots down. That would be a spot to get in down to here. Even though it pushed through, it gets right back up, right up to the resistance level. Here the support goes right through the resistance, but wants to test again. And that's kind of like where we're standing now. I like to trade off the 1 hour chart. But you see it's just like an elongated big version of the 4 hour. But I'm not going to respect, this. It's pretty respectable. I definitely would put like an ellipse over here. And you're seeing it's being respected here too. But these bigger levels, these are the ones where you have these huge moves where you shoot off these huge ones. And that's really it. You just want to mark them off, understand them, and look for them. Now, just one thing I would want to tell you more is that, I see sometimes, like I watched a video on YouTube the other day where a guy's like, I'll just teach you the easiest strategy, just trade right off support and resistance. And it's not really true. Like, you want to trade off support and resistance for sure, but you can't just wait for it to hit resistance and then just, assume that there's going to be a rejection. Like this one over here, that's pretty surprising that it just went right back up after hitting that. This one, is also not so much. Like, look at it was really bullish, bearish, and then just hits it and gets. But this must be like a really strong support. And you see over here the consolidation that made it a support level. Now here, this makes more sense to me because the market was strong. It actually broke through, right? And it was rejected back. This could be a nice a breakthrough and a retest, and then going out here. I'm sure a lot of people, saw this. Maybe some people would want to wait till here, but they didn't, and they went over here, and then it just got stuck and went all the way here. It didn't get higher than this, and at that point, after this, I'm sure a bunch of people got in here and just shot it down. So that's a nice real rejection from the support and resistance. And here as well, getting closer, a touch, going through and just shooting right back down to the last support. And, that's really what I think, guys. You got to trade off these levels. You got to mark these levels. You got to update these levels. You have to understand that the higher time frame levels are the ones that are more respected. More of the big banks are watching them. The position traders, the swing traders are watching them. You know, the minute and the 5-minute and the 15-minute levels, those aren't big. It's the 4-hour levels, maybe the 2-hour levels, sometimes the 1-hour levels, but the 4-hour levels, the daily levels, those are something you definitely want to keep in mind, even if you're scalping, because once you reach those levels, all of a sudden you'll look at some amazing setup, and all of a sudden, boom, you'll just be shot out. Why? Because it hit some crazy support level as it did here, and it just shot down. How many pips was that over here? You know, from here to here, it was 17 bars, 7 hours, 82 pips, 17 hours, 82 pips. So all of a sudden you're in a great trade. It looks like it's going up, and you're just, you know, attacked like that. So that's why support and resistance